All right, the property prequel, be in the know before you buy. How are you, mate?
Matthew Srama, how are you, my friend?
I'm good. It's a exciting one this week. I'm so pumped to talk around this one. Obviously, election coming up, but interest rate chat. So today's EP's all around. What does the interest rate rise mean to you in a nutshell? And it was really topical as well. We had an agent on last week, not just any agent, number one in Australia.
Yep.
So you think of all the agents in the world, in Australia, we got to speak to the number one. So if you haven't heard that EP and you want some insight into if you're in the industry and you want to learn from one of the best in the game, or you're a buyer and you want to understand how 20 years of market sentiments and shifts and all those things change, and hearing it from the horse's mouth, go listen to that one with Troy Dowker. It was a good EP.
Oh, mate, it was unreal. It was, as you say, whether you're a buyer, whether you're an agent, and I reckon even if you're just a business owner,
100%.
or even as a PAYG, going to work every day, trying to get the best out of yourself, some of his daily habits and rituals.
Is interesting, eh?
Mate, I know we've never discussed yours, but you're exactly the same as Troy Dowker, so in respect to that. So that was really, really good chat last week and very insightful on a number of different topics, wasn't it?
It really was. And one thing we did touch over last week was around just what he's noticed around when sentiment changes and market changes. And he had a really similar belief to us around, look, if you are prepared, it's not all doom and gloom. You got to really think outside the box and different things. And why we're so big on that, as well as when you actually do the numbers and look at things from an interest rate rise point of view, and if you have buffers and understand it, it's not as scary as you think. So today's EP's obviously not financial advice by any means. It's literally our commentary talking around it. And it was an interesting one. Like, I know you had a look at some numbers with some broker mates of yours, as did I. But it was interesting, what we were sort of finding there, hey?
Oh, it is. And there's a lot of hysteria, particularly given that this rate rise has occurred in election time. We've got a big election on Saturday, and whichever camp you're in, that's your call and your business. But it has created a lot of hype, and it has. I think people have got short memories, and by that I mean we've been sitting at a cash rate of 0.1% for a long time now. Historic lows.
Yeah.
And this is, don't forget, this is an emergency cash rate. This, by the RBA, when the pandemic hit, this was to stimulate the economy, to give people confidence. 0.1% historically low, the lowest we've ever seen in Australia. We've had a rate rise off the lowest base we've ever seen now to 0.35. So we had 25 basis points. We're now sitting at 0.35. Still historically low, ridiculously low. But the amount of hysteria that I think it's caused in the market, to me, has been a little bit surprising. And I know we'll chat about around that you've seen some slowing and some stagnation of prices and some activity on the ground as a buyer's agent. But from a numbers point of view, what does it mean? Well, I want to say a $750,000 mortgage, it's around $95 to $100 extra a month that you need to find. So let's call it $25 per week that you've got to find. And look, if you're sitting in a property now that, if that's now causing you problems, that extra 25 a week or 100 a month, well, my question is, is that property affordable to you in the first place?
Have got in there in the first, 100%.
And I know, reading the media as we do and looking at things as you and I always do to stay on top of the game, given our roles in the property game. Mate, you were quoted a couple of weeks ago with the Gold Coast Bulletin, the Courier Mail, a number of media outlets around your thoughts. Do you mind giving some insights into what that was for people that missed it?
Yeah, no, it's an interesting one, eh? The media loves noise. So, mate, my phone was running hot. I remember it was on a Tuesday, and mate, I had 3 media outlets buzz me all the same day, all around the same topic.
Wow.
So, and it was all around, what are you seeing on the ground? Like, is it hectic? So it was really cool that I could provide some value, I guess, to anyone out there from the sentiment, because I always believe people always believe what they see, read, and hear. And then it's not always around that. You got to really understand what's out there. So I gave an opinion on, obviously interest rates are rising, but what we heard, and even similar to what Dowk said last week, if you're prepared and you understand what you're going in with, it's not too bad. That's probably the biggest thing is, obviously, you should not be buying property if you can't afford it in the first place. That's probably the biggest tip I gave. The second biggest tip was sentiment is driven by the noise and everything. And I think if you're in any part of life, whether you're buying, investing, or owner-occupied home, stay focused on what's important to you, because everyone's got an opinion around what things are happening and barbecue chat and all those sorts of things. So when you peel it back, and as you said, that was really insightful around the brokers. I know one broker mentioned to me, roughly on a 30-year loan period at $1.5 million purchase, you're probably looking at $190, I think it was, under $200 a month, roughly $47 to $50 a week extra. So potentially a dinner out per week, So it's just knowing that and calculating it, working backwards from that. And one thing people always forget is, as I said, I'm no broker whiz or anything, just from my experience in the game, is when you're going for a loan, a broker generally adds in calculation. They use like a calculator.
Yep. Adds a buffer.
As a buffer, yeah. And I don't know what the going rate is. Sometimes it's 3%. They'll actually add. So if it interest rates at 3%, and on their calculators, it's at 6%. And if you've got an investment property, I remember I learnt this when a few of my investment properties, where they look at all your rent. They're all at mate. They take 20% off, or 40% even sometimes. So they shave it. They put the worst case scenario out there, and also up your spend, all those sorts of things, which you can chat to a broker around. But basically, if a bank's hesitant around lending you money, or it's just getting by or anything like that, it's really have a look at what your household income's doing, because banks obviously don't want to lend you money if they think you're at risk.
No, that's right. So you and I are both big believers, and we talk a lot about sentiment, consumer sentiment, and confidence, and on the ground. So moving forward now, election on Saturday, some people are very fearful around the noise coming out of some economists about the future direction of interest rates. I feel that's starting to slow things down. What are you seeing at the moment on the ground in your business?
Yeah, it's a crazy one, isn't it? It's never been, I guess, from a busy point of view for buying, it's never been busier. This has been the hottest time from a deal side point of view. And a quick one is the ability to put a deal together from the agents and buyers agents has never been stronger. So what I'm noticing is a lot of agents actually leaning into buyers agents to manufacture the deal, because they're struggling a bit more compared to when there was 50 buyers at the open home.
So just on that, that's a great point. We're not talking a year ago. We're only talking a matter of weeks ago, correct?
Exactly right. Yeah, exactly right. And that's markets. They can shift like that. So, and what I'm noticing is, and this is some of the I guess, buyers we've been doing, but also out in the marketplace, I'm seeing other buyers as well, is they're manufacturing deals and they're picking them up for potentially under market value. So I'm talking like there's been a few where we've done 50, 150. And there was one, I'm not going to name the address or anything like that.
Yep.
Mate, we picked it up probably 200K under like valuation, so to speak.
Unbelievable.
So when you look at it like that, that was due because lower sentiment, and you got to know how to piece the deal together. You weigh that equity gain on the way in versus the surplus of the interest rate rise of maybe $50 a week versus potentially making an equity gain of $50,000. It's sort of, I think that's where I'm noticing the good buyers and people who stay in their own lane, rather than listen to, your news outlets and things like that.
Yeah, put the noise to the side and they're acting. And we did a podcast a couple of weeks ago about buying in isolation, didn't we?
Yeah, that was a good one.
Not
Yeah.
in competition. And I know you had some great feedback around that. And now some people are actually coming to you saying, we want to be part of that. We want to now buy in isolation and get access to some of these deals undervalued like you're talking about. But just looking ahead, Srams, there's, we're 0.35 now. We're talking about interest rates today, of course, as a cash rate.
Yep.
There's a lot of noise, and you and I both know media love to pump it up, but they're talking about a rate rise every month leading into December. We're ultimately looking at potential cash rate in December of around 2 to 2.5%. So right now we've got an election on Saturday. We're sitting at 0.35, a movement towards 2%. you can understand why that actually does create a lot of negative sentiment in the market. Have you got any advice for buyers that you're dealing with, or just any of our listeners around, how do you sort of put that noise to the side, and how do you actually maintain that clear focus and vision in order to achieve your goals and your objectives?
Yeah, good question. I think two parts to it. First part is understanding what's important to you. Like, is this an investment or somewhere to live? I remember Troy saying on last week's episode, like choosing around your lifestyle, and sometimes you can't put a price on where you want to live.
Yeah.
So if you're someone who's hating where they live, or they need to move because of employment opportunity, or they want to upgrade their lifestyle or something like that, and they want to move to a destination where they need to go, you know, if they're fearful that interest rates are going to keep creeping, well, that's another 12, 18 months that they're not fulfilled and happy. You know, so
true.
Like, you can't really, so that's from an owner-occupied point of view. It's like, what's important to you? If it's important to get out where you are and move to a new destination, do the numbers with a financial person and understand what the buffers are. And here's a big tip that I find is, sometimes you can look at where fixed rates are. This is a tip I got from brokers. When fixed rates creep up, or they're set at that can sort of, I guess, tell you realistically where it's going to be.
Future direction.
Yeah. And that's very baseline advice, but that's what I've been told as well. And it's a really good, because obviously a bank wouldn't fix it at a certain percent if they know it's going to creep to a certain level.
Exactly.
Because the bank always wins, you know. So easy tip there for buyers. So it's around understanding your household income, your surplus and whatnot. And then for an investor side of things, realize, hey, are you looking for a quick transaction to make money? Because I don't feel anyone who's in it for a quick buck should be getting in a property. I think that's what maybe other asset classes or Bitcoins and things, you know, it's high reward for higher risk. I feel properties are very much a get rich slowly thing. So if you're looking at it from a long term point of view, you know, you're a little bit, you look the same age, but you're a little bit older than me, Crossy. So you've also told me, mate, the markets, I remember when you first bought, interest rates were closer to 10%, weren't they?
Yeah, well, it's interesting because, we spoke off camera, and what are we sitting now? 2022, I think in 2005, my wife and I bought our first actual home. We'd had a number of investment properties prior, but this was our first actual house. So this is 2005. We've come off the back of a boom in southeast Queensland, done pretty well out of a couple of properties, and said, well, let's buy a waterfront home at Currumbin. And I remember the repayments then, it was around 9% interest rates. And in 2005, my mortgage was a lot less than what probably it has been, but my repayments were so much higher. It's crazy. So 9% as a retail rate, not a cash rate, and an actual interest rate. Whereas now we've got cash rate of 0.35 and variable interest rate sitting anywhere but sort of high twos into the fours, depending on who you are. But the actual repayments were a lot higher then. And I was younger. My wife was on maternity leave, one income. It was tough. It was really tough. So I sit here now with the benefit of experience and time and go, well, I'm not one bit worried about that. If the projections are true and we do get to a cash rate of around 2 to 2.5% by Christmas, I've got no real concerns about that. And that's not trying to sound arrogant or blasé. That's like, well, I've seen this before and I've seen it much worse. And I remember mum and dad saying to me, well, you know, we saw 20% interest rates, albeit at a much lower cost of housing at the time. So it's all relative. It's all maintaining what you're trying to achieve in life, putting the noise to the side, not worrying about what happens on Saturday, you know, whether Albo or ScoMo get in. You know, I think that's kind of irrelevant. Geez, Albo's had a couple of slip-ups over the last few weeks, hasn't he? You know,
he's a good one for it, eh?
He's a character. So, whichever hat you're wearing on Saturday, I think Labor are notorious spenders. So if they do keep putting interest rates up and the economy does start to stall quickly, history shows that they're pretty quick to start spending a lot of money and putting us in further into debt. And the coalition, well, you know, we've seen what they've done over the last sort of 9 years or so. So either way, I'm feeling very confident still with property in good areas where we're sitting today. What do you reckon?
Yeah, it's an interesting one, and this is something by no means financial advice, just some advice I got actually, just from a high level economic point of view, is that Australia is one of the best countries globally for assisting people to not get into financial duress or anything like that. Like, we're actually a country who wants to make housing affordable and make it achievable. And Australia's really good at setting rates and slowing things down and picking them back up. Like you're saying around COVID, they had to stimulate the economy again. Yep. Australia's really good for assisting people. Like, it's always glass half full versus glass half empty, isn't it?
Yep.
Some people think, oh man, we're in a country where it's so unaffordable to live and this and that. Like, I hate the government. But then you look on the other side, you compare it to some of the other countries in the world. We're actually really blessed.
We're a lucky country.
Very lucky. And I can tell you firsthand, knowing buyers agents and just friends overseas, mate, they'd give an arm and a leg to be able to call Australia home, but also be able to be part of an economy where it's quite responsible in what the government does. And also from a housing point of view and a lifestyle point of view, you know, it's a really solid country. So I guess that's looking very macro sort of thing, but perspective's always a big one, isn't it, when it comes time with sentiment, hey?
I think perspective out of today, a key takeaway is around listeners have some perspective around what's happening. Look what's happening in the Ukraine.
Good point.
As you said, overseas, we've got a small increase on a cash rate. We may have a couple more. Look, I honestly don't think we'll see the monthly increases like they're talking about. I think it's got to be a slow and steady approach to that to keep consumer sentiment strong, to keep confidence, to keep spending in the economy. We've got runaway inflation, but a lot of those are external factors that can't be controlled. I think we'll have one or two rate rises. We'll see what happens. We'll have a change of government potentially, and if not, well, great, whatever, no matter which side of the fence you sit on. But I think the word you just said, Shrams, before was perspective.
Yeah.
Let's all get some perspective around what's happening and just get on with things.
Yeah, and that's it. Like anything in life, you got to be well planned, well equipped, and have buffers. That's probably the thing I've noticed with people like yourselves and people who I've seen been in the game for years and years and years. They go through the peaks and troughs of it all. So if you've got the mindset of you want to make a quick buck in and out in the moving and fast moving interest rate, and just be careful, you know. But if you are looking from a long term play point of view, I've said it before, like the commodity is shelter. So at the end of the day, if you're buying the right thing and you're being safe, that's probably the biggest thing. Chat to your broker, accountant, financial planner, whoever you got in your corner, and get educated and ask questions. That's probably the biggest advice I can get, because at the end of the day, you got to be educated within yourself, because you take full responsibility, you know, and that's a big part of this podcast as well. It's by no means financial advice. It's really just assisting people to, hey, chat to your people and get educated, isn't it?
It's exactly right. And it's a good thing that the property prequel is free. It's not a subscription, so you don't need to drop the subscription to the prequel if you got to tighten the belt.
Well, some maybe for the investor, you know, maybe we'll have to look into it. You know, it's tax deductible though, but mate, we'd never do that. This is a platform to just assist and whatnot. So if there's any feedback on any of the apps, we love hearing it, and it's awesome. I'm really excited post-election what the chats will be. We got some really good topics and some exciting guests coming, eh?
Yeah, looking forward to it. Good next sort of 3 to 4 weeks will be really, really good. So can't wait.
There's some bangers, mate. Some bangers. Stay tuned. Thanks, Crossy.
See you, mate.